We have Amit Jain with us on the show from Ashika Group. Amit, good evening and welcome to the show. When it comes to the stock market, isn't it phenomenal to see markets nearing record highs ahead of the crucial election verdict?
Absolutely, it's always a pleasure to see market on a new high. That too before the election, because I think till last week everyone was predicting that the market is going to go down because NDA is not going to get a clear-cut majority. But I think now the market has the speculative market has reversed their order, and I think there is almost certain that the ruling government will come back with a majority. So I think market has seen a bounce back. It is always good to see the market at a lifetime high.
Right. Amit, you have been quite value conscious when you approach portfolios or you talk with your clients. Obviously, the valuations are quite expensive at this point in time, with only select pockets like PSU stocks moving in trade. How are you really strategizing your portfolio ahead of the election verdict, and given the fact that the valuations also look quite stressed?
So honestly, we see a deep value only in two sectors as of now. Number one, the banking sector.
Okay.
And number two, FMCG sector. I think these two are the crying buy at current levels for the long-term investors, because even in banks, if I go to PSU banks, there are a couple of quality PSU banks which are trading even a less than a price to book of 1, which is a compelling buy by any reason, because you will have a very limited downfall even if something reverse happens. But I think this is going to be a great value.
Okay.
Number two, in FMCG, we are going to see a huge jump in demand, because generally we have seen in election years, post-election we see a lot of jump in the FMCG consumption, because there is a lot of money which gets distributed to the rural market in the hands of the customers in some form of cash or some other forms that gets distributed. And I am sure that this cash is going to drive consumption from FMCG from next quarter onwards. And in last con calls which we have from the FMCG sector, it seems that the demand in the rural market has already bottomed out, and with this election it is going to give a further spurt to the FMCG sector. And given the valuation they are available at current prices, I think they are compelling buy, where you can invest a large sum of your amount in banking sector and FMCG, and which may be an election proof portfolio in my view.
Okay, so Amit is probably looking to make his portfolio election proof. But Amit, what makes you so much bullish on these FMCG names? Valuation is one part, but do you think with probable normal rainfall or probable rural consumption picking up, there could be some further upside to FMCG earnings, or are you purely betting on valuations and probably some margin of safety as well?
So valuation is of course the compelling part to it, but in addition we have seen the rural market consumption, which has never picked up after COVID, has finally picked up in last quarter. That's the numbers speaking of themselves. So that, and once that consumption start picking up, it's just a beginning of the trend. That's what we believe in. And if we take a perspective of a year or 2 year, from here on we see that this uptrend which has come for the FMCG consumption will continue. And of course the election year, because as I said, there is a lot of cash which get distributed into informal economy, which is mostly rural part of the world. I think that will drive these numbers going forward. So valuation, along with the strong demand for the future, both the reasons give me a compelling reason to buy this sector at current levels.
Okay. Amit, you usually do a lot of these global macro studies, and you also have quite a good grip on commodity cycles. Given the fact that we have a multi-year bull run in commodity stocks led by obviously some loosening of policy in China, today also we saw a lot of non-ferrous metal stocks up. Copper is up by nearly 15% this month. Zinc, aluminium, steel, you name the commodity, and they have gained in the past 1 or 2 months in double digits or probably in high single digits. What is your view on these non-ferrous stocks, especially the ones having some exposure to copper or aluminium?
So commodity cycle has bottomed out in before COVID. It is around calendar year 2020. If you go back to the past and study the commodity cycle from 2010 to 2020, it's a span of 10 years. Commodities and metal has hardly performed.
Okay.
If I see the sectoral level, the CAGR for Nifty Metal Index had been less than 1%.
Okay.
And this bull-run has come after 10 years of long gestation period. So I'm sure this bull-run is going to stay here at least for next 2 to 3 years till the time the rate of interest start coming down decisively.
Okay.
Right. So this bull-run is going to be there for next 2 to 3 years, and I think we are extremely bullish on metal. We had been bullish on metals, and will continue to hold a stance of being bullish on the metal and energy sector.
Okay. So anything specific that you like in the energy pack? Will it be oil marketing companies? Will it be oil producing companies? And also for metals, Amit, I wanted your view. Would you be looking to pick, steel stocks or probably copper aluminum stocks, the non-ferrous metal pack?
So probably for energy, I think we bought Coal India where it was close to 240.
Okay.
Now it's already doubled in last 6 months.
Okay.
And we continue to hold our position because because 80% of the India's consumption is driven by coal, and of course Coal India is the only producer there. So we continue to hold our bets positively on Coal India. On other side, on oil marketing company, I believe IOC at current level offer a compelling valuation, I think, which give you a lot of cushion on the downside as well. So it's a very safe bet with a high dividend yield. This stock is at current valuation, looks very attractive to us. When it comes to metals, I think we'll choose copper and aluminum over any other metal as of now. So we'll go with Hindalco. Hindalco offers a great value at current levels.
Okay. Amit is sitting on good gains when it comes to Coal India, almost double to what he's bought for his clients. Amit, when you talk to a lot of PSU managing directors and chairmen, the entire perception has changed. The entire thesis has changed. They have been talking about good targets and good return for investors. Obviously, whatever PSU stocks you have spoken are probably that Navaratna status or in the higher market capitalization bracket. But what about these PSUs which are there in the railways front, or probably on the clean energy front, or probably something like a PSU bank in the mid and small range? What exactly are you seeing in these PSU stocks, given the fact that they have already had a dream run? Obviously, you spoke about a few stocks in the large cap categories, but are you also looking to position your portfolio in some of these mid and small cap PSU stocks?
So honestly, because of the lesser free float in these stocks, we generally refrain our clients from having some speculative gains on these lines. They may give us say 50, 70, 80% return in the next 6 months. But I think the speculation generally we avoid because we have larger family offices who prefer stability over speculations. So we generally refrain ourselves.
So, in terms of inflows, Amit, how are really clients and big family offices approaching the markets? Obviously, they also have their own teams and own views on the market as well as the macros. So how typically is the interaction with you and your family offices client? Because near the elections, a lot of people have made money. So are they willing to bet more of their funds in the Indian stock markets, or probably they are looking to book profits once the election outcome is out?
So honestly, no one is looking to book profit, at least from a bank stocks at current levels.
Okay.
Because banks offer a deep value to you. Yesterday, Prime Minister has made a statement that banking sector had made a profit of 3 lakh crore. Right. So it's a complete change what we have seen in 2014. And honestly, the Indian banking system is one of the most robust banking system you can have in the world. Right. And in last 15 years, you have 600 banks failure in US. And you can count on your finger how many banks, and including cooperative banks, got failed in India. It's hardly 10 and 12.
Okay.
Not 600 banks. So Indian banking has always been on a premium, and they will continue to be on a premium because of our robustness of compliance and processes. Okay. So no one is selling banking stocks. One. Number two, yes, people are booking profit in mid cap and small cap because they have run up too fast, too early. So of course, it's important to book your profits because you make money by booking profit, not merely on investing and keeping it on a paper portfolio. So better to book profits. So people are booking profit from mid cap and small cap.
Okay. Amit, since you track global markets as well as global commodities and currencies, what could be the risk for the Indian markets, say post elections or probably in the next 6 to 12 months? We have seen a lot of volatility in the past when it comes to Russia-Ukraine war, then probably Israel-Hamas. Market typically has given a big dip between these two events. How do you really position your portfolio so that probably it's protected from war at externalities, or probably volatility of currency? Recently we saw some crazy moves in the Japanese yen versus the dollar, and typically the global currency volatility also has increased along with global commodity volatility. So from a global standpoint, what risk do you see for the next 6-12 months?
So honestly, once the election are done in India, we see only the biggest risk for the global market would be geopolitical risk, because after this death of Iranian president, I think we don't know how the geopolitics is going to turn out, how oil is going to play out in next 1 to 3 months. But I think the biggest risk for any other fund manager in the world will be more geopolitics rather than a Fed interest rate stance, because the Fed keep changing its stance every month. But and that's controllable because we know how Fed is going to behave in a particular situation, right? But when it comes to geopolitics and the ego of the office bearer of different countries like Mr. Vladimir Putin or Mr. Joe Biden or any other office bearer in the Gulf, we don't know how to manage their egos and what decision they are going to take to safeguard their own interest. So geopolitics is the biggest risk for us to manage in next 1 to 2 year time. Also, we are extremely cautious on US technology sector from last 1 month. We believe that to our family offices we have suggested. In fact, in my Moneycontrol article almost say 1.5 months back on your channel itself, we said sell US Nasdaq and buy Hong Kong technology sector. That strategy itself has given you 22% return in last 1 month, because Hong Kong technology sector is trading at a PE compelling valuation of 7 to 8. While Nasdaq is compelling is at a valuation of close to 30 PE and above, right? And of course, the China is any which way not behind the US in terms of technology, whether we accept on the global media or we don't. But China is way ahead in terms of technology and other factors from US, at least at par with them. So once on a Nasdaq, I'm getting at a PE of 32 or 30. Right, and Hong Kong technology I'm getting at a P of 7. So as a value investor, as I said, I always pick up the value sector and value stocks. I think we have picked up Hong Kong technology sector, and they are listed on NSE. So you can find these Bs listed on NSE in Indian stock market, and the investor has made almost 22 to 27% return in last 1 month. So that's the opportunity we are seeing in the global markets.
And probably it's great to see that NSE, we have a whole host of ETFs which are available to trade the global markets. Amit, we leave it at that. Thank you so much for speaking to Moneycontrol and taking out your time, and for that insights that you give on the global markets. With that, it's a wrap on this show of Moneycontrol. Stay tuned, and for all your business news and updates, we have your favorite app, Moneycontrol, which is clicks away. So stay with us, and we'll meet you tomorrow at 9 a.m. with the market setup.